Wow, builders are in big trouble, possibly on a lifeline. Take a look at this article. Economist issues red flare warning for the US housing market. And this is one of the nation's top economists saying that the housing market is not in a good spot, which is what I've been saying all year long, resembling 2022, where we saw prices drop 10% nationwide and 15% in our local Utah housing market. Now, if we continue dissecting this, and I have a lot to unfold here: text messages, articles, data points, a lot that is showing builders are buckling up for a bumpy road ahead. A leading economist has issued a stark assessment of the US housing market, battling issues in both construction and sales, and warned that this could soon affect the entire US economy. Those are things that I've been saying could happen. And I did graduate with a degree in economics from the University of Utah, and I did graduate in the top 2.5% of my class. And prior to doing real estate, I used to do stress tests for 100 million and billion-dollar portfolios. That's where I'm breaking this stuff down and why I follow the data the way that I do. I sent off a yellow flare on the housing market, he said, in a post a couple of weeks ago. But I now think a red flare is more appropriate. Moody's chief economist, Mark, wrote on X, formerly Twitter. Now, Moody's was the last credit rating that dropped the US credit score as a whole. And that is what's seeing our debt cost more to the taxpayers and the US government. And if we keep dissecting this, well, before we actually dissect this further, another thing to keep in mind: the amount of single family new construction that's out there is just almost as high as it was in 2008, 2009. We have had up to 10 months of supply of inventory for new construction. We're down to 9 months now. And we were at 12 months at the peak in that 08, 09 fiasco. Well, 12 months, 8 months, 9 months, 10 months, there's not a big discrepancy there, right? But one thing that they do not mention to you a lot, they fail to mention to you, is this graph right here. Now, do you see the spike to the right corner over here? And you see the spike to the left? Well, I'm going to explain what that is. This is multifamily units of 5 or more. I'm sure driving down the interstate, you've seen, and essentially they're popping up everywhere. You don't even have to be along the interstate. These big buildings, and I'm sure you've seen some of them not being completed. They've just been under construction for years and years. And there was the one earlier this year that I covered, or at the end of last year, where it went bankrupt down toward the Salt Lake area, toward downtown. It went bankrupt and it still hasn't been completed. You're seeing these luxury apartment complexes popping up everywhere. Well, this is new construction as well, just in a different format. And you see that the amount of multifamily units is much higher than it was in 2008, 2009. Almost 3 times, 2.5 times the amount of our peak here in 2023 compared to our peak in 2008. Look at the difference right there. Now, it is the highest level and higher than the boom of the 1970s. That means people are going to have many more options when it comes to renting as far as new construction. This is still a supplying people with rentals. Well, if we have, let's say, 20, 30% less single family homes being built, but we have an increase of 2.5 times the amount of multifamily, these apartment complexes being built, wouldn't that help on the supply side? I mean, if somebody's renting or if somebody's buying, they're not homeless to have a roof over their head. So keep that in mind. Now, also smash that like button, hit that subscribe button. Nobody's giving you this kind of information, nowhere here in Utah. This is why it's very important to pick a real estate agent that's got your back, like Dinko The Realtor. So when you do need a realtor anywhere in Utah, my contact information is down below in the description, and we can get together. I do give a little bit more specifics, but now I've kind of stopped doing that so we can see we're a good fit. Free consultation. If we are, you're going to get even more information, making sure that you have all the information you need. Now, going back over here, we see a red flare warning is more appropriate. And I've been signaling this all year long, that it resembles 2022. And if we look at the Excel sheet that I've been keeping track of, in May of 2022, the median price in the greater Salt Lake area was $600,000. Then we had 9 consecutive months of price drops. And in January, it bottomed out to $510,000. That was a 15% drop off the median price. Nationwide, it was 10. So the greater Salt Lake area was hit harder than most of the rest of the nation was, and the bigger metros down there. So back to the article. Red flare warning. Maybe they just need to hire me as their economist and let me tell them what's going on, since they just like to fabricate these numbers, and both administrations are doing it, and nobody's giving people the real thing, and they're delaying recessions, and they're even changing the terminology. I mean, essentially what we had in the second half of 2022 was a recession, but they changed the terminology. Then they bailed out Silicon Valley Bank, bailed on Bank, Republic America Bank, whatever it was, and continued bailing people out and not allowing the foreclosures that both administrations have been abusing. And the Trump administration just kicked it down further here into the fall after the Biden administration kept extending it and extended in October again. And anyway, that's one thing we have to follow, and we'll follow that. So again, when you're working with a good real estate agent, I'll be sharing all that with you. And check this out. I know I've shared this in the past, but how many realtors are sharing this? Look at this builder offering a fixed rate of 5.49% and an additional 9% in concessions. This would either go toward a rate buy down or the price adjustment. I'm seeing this across the board, and I'm continuously getting notifications that builders are offering incentives. And can you blame them? Because if we take a look at this article, if we keep reading, the red flare warning indicates major instability and risk of a further downturn. And that further downturn is a slowdown in construction activity and sales. Well, I've been sharing with you guys that we have, where is it? Housing market warning issued. No one is buying new homes. And right here, I've shared this article in the past. So this one over here, let me pull that back up. This one right here was June 30th. So nobody is still buying that many new homes. That's why builders are sending out notifications like this. And and you got to ask yourself this right here. This right here is the big important part. Builder confidence fell sharply in May. That's the spring selling season. I've shared this in the past. As low as November of 2023 and almost as low as December of 2022. And what happened there? Well, we know that's when the market essentially bottomed out nationwide and here locally, 10% nationwide, 15% here. Well, if these builders are feeling as bad as they did at the end of the year in 2023 and at the end of the year in 2022, they're sending out notifications like this. Things just keep coming out. I mean, all of a sudden we have a red flare warning. You have to ask yourself, what's the potential that these builders might be offering come October, come November, at the end of the year? If their builder confidence is essentially as low as it was then and they're already giving these deals out, what happens when the existing sellers finally come to their senses, which they are now, and I've showed this in previous videos, start slashing their prices? The new listings that are coming to the market are coming priced better because, well, it's a more serious seller, somebody who wants to actually sell, and they see somebody lingering on the market, so they're going to price their house better. What happens then? Then you see these prices of existing homes coming down too, which puts even further downward pressure on the builder. And the builder is just essentially telling us where the market is headed because they're in the business of selling houses. They don't care about equity. If somebody gave them free land and they were able to build a house on it, they don't care if they used to sell those houses for $600,000-700,000 and now they're selling them for $400,000. They paid $0 for the land and their margin has stayed the same. So they're going to sell them all at $400,000. They don't care about the equity. They're not living in the house. They have a loan on the construction and they want to get out of that as soon as they can. Red flare warning and slowdown of the construction activity. And right here, he added that home sales in the US were already depressed. And of course they were. I've been sharing this as well, that everything is the worst it has been in 10 years, 15 years. Sales are the lowest that they've been in 30 years. You have to go back to 1995 and how much lower was the population? We have been depressed on the sales in the housing market for quite some time. And there's people that I know across all other industries, even people that own dealerships, car dealerships, they are struggling. So if the housing market is struggling, the car industry is struggling, those are the two biggest liabilities. And it is a liability. The only way it's an asset is if something else covers it or if the mortgage is being covered. But if you're paying for a mortgage, if you're paying for a car payment, rich dad, poor dad, that is a liability. An asset is something that gives you money. Anything that you own, that you live in, that you drive, right? Anything that you wear, that is all a liability. It's not an asset. You're paying for it and you're not getting anything in return. So anyway, we won't go into all that. But according to the latest report, right, new home sales fell sharply in May, with sales of new single-family houses dropping 13.7% month on month. That's wild. This is end of the spring, beginning of summer. I mean, summer technically doesn't start till June 22nd, but for me, summer starts June 1st. It's when the school year ends. I don't care what the calendar says. But anyway, we're here in the spring and the summer when you're supposed to have a strong home selling season, and it fell sharply. And this was a 6.3% below the rate of last year in May. Again, resembling, ding, 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 2022. So I mean, what are we going to expect seeing? And take a look at that. You're seeing bigger drops as the year progresses toward the end. So again, when you want a good real estate agent, give me a call. I'm going to make sure that I give you all the data. You're not going to feel rushed. I'm not going to fearmonger you. We're going to dissect the graphs. We're going to dissect the information. That way you have all the information. And right here, if you take a look at this 30-year mortgage, it's doing a U-turn, as you see right here. And it's might be hard to see on the screen, but it's not going to continue coming down. So the job data report caused the 10-year to come down. It caused the 30-year mortgage to come down, but it's doing a U-turn. So it's no longer in free fall mode. And right here, if you take a look, you see that these active listings are much higher than they have been in the years past. If you take a look at this blue-purple line, you are seeing that that is plateauing. And that reason for that is sellers are taking their house off the market much faster right now than they have in the years past. And that actually isn't all that bad news for buyers. And I'm going to make a video on this. That way, we're going to jump into the details, because if you take a look at this graph here, you see that the listings being entered are actually much higher. 500 units, 400 units, 900 units. So what the heck is going on? Because that doesn't make sense. And I'll make a video on that, sharing why that's happening and what that actually means for buyers and sellers. Now, a quick recap here. And when you do need a real estate agent in Utah, give me a call. Dinko The Realtor has your back. I'll provide you even specific data, even in more depth data. And there's no fear mongering. And I don't care if you buy a house this year, next year, 10 years from today, 20 years from today. I've been doing this for almost 10 years. I'm going to continue doing this for another 20 to 30 years. So take your time, and I want you to feel comfortable with your decision. No fear mongering, and it should be your decision. Don't let anybody else influence it. Make sure you're following what's going on. So quick recap. We're seeing that economists issue a red flare warning for the U.S. housing market. Housing market is not in a great spot. Neither is the economy. Right here, we're seeing a red flare is more appropriate. And right here, we're seeing a slowdown in new construction activity and sales. Right here, we're seeing a sharp drop-off in May and June, which is essentially a good selling season, and it's 13% below, 6% below. And right here, you have a market warning issued and nobody is buying. So this was a June 30th article, and the one that I've been sharing is a May article, and that the builder confidence is essentially as low as it has been in November of 2023 and almost in December of 2022. And that's when we saw these big price drops right here. And if we continue going on, you see that the treasury yields tumbled after the job data, but that has since stopped itself. So there's no longer a free fall in the 10-year treasury or in a 30-year mortgage. And you're seeing that that inventory is elevated, but it's plateauing because sellers are taking their house off the market at a faster pace. And I will be making a video to cover that for you.